The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 18th. I know I could remember the date, but it is wonderful Wednesday edition of today's Trader's Edge show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be, and I do mean always be, pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know how grateful I am for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com, and any ping will do inside our Tiger's Den. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 37 points at 19,789. S&P's off. Basically, it's flat, trading at 2267. NDX 100 off a point, trading at 5043. NASDAQ Composite up a point. Russell 2000 flat. Wow, we got flat all over the place. Not flat in the semiconductor index. That's up a little over 1%, 9 points and change. New York Stock Exchange flat off 12 points. The Wilshire 5000 off 7 points. That's flat. The transportation are up 0.1%. They're up 11 points. Gold is back $1. That's flat. Silver's up 12 cents. That's up less than about 0.75% out there. Light sweet crude back 2% right now, trading out at 52.17. Leading the charge to the upside, it is the Jazzy One, JAZZ. You got to love that ticker symbol. Up $12.50, nearly 11%. Collucid Pharmaceuticals up 32%, $11. They must have good news. Azamil Holdings up 6.75%, $7 to the upside. Cyber Optics up $5. Broadcom up 4. Martin Marietta up 3. Granger's Worldwide up $3. Not sure where that came from, but Gimo or Gigamon down $13, 30%. Priceline is off $9. World Media is down $7.60. NetEase off $7. AutoZone down $8. Target or Target, whichever you prefer, is off $6. So, some stuff to look at, but really on a day like today, very narrow trading range boundary day. This is an excellent day to go ahead and keep me company. Co-host or just call with a question or anything. Just please, just to help the day, the hour pass. Now, we do have a request, first request, coming into the Tiger's Den, asking if we could go take a look at bonds. So absolutely, we can take a look at anything and everything that you would like. So when I like to begin taking a look at bonds, especially if this was the first time, whether it's first time or not, it's the very first thing that I like to do is say, okay, is that correlation that we know about, is it still exist out here? So we just go to a 10-minute chart. That's what we have up on our screen out here. And this 10-minute chart looks at gold on the top panel, bonds in the center panel, and the driver of both of those instruments, the Japanese yen futures contract out here. Now, the reason why I'm looking at the futures contract now, I have no delay whatsoever versus if I go take a look at the currency pair, I've got a 10 or 15-minute delay, and that would not accomplish the same. It would almost accomplish it, but this really accomplishes it. You don't think that there's some type of correlation. I mean, you can go bar by bar by bar with regard to now, just simply now, it's not going to be the same percentage tick, pip move out here, but directionally speaking, It is. I mean, really, you could take a look at, green bars out here, red bars. It's so evident. So the answer to our first question is yes, that correlation exists. Now, it's a 10-minute chart out here. What else can we actually do on a 10-minute chart to provide us with any kind of information? We can turn on our TAS market profiles. Many of our denners out here are intraday traders. The nice thing about these different sets of tools are that they can be applied to all different time frames, daily, weekly, monthly, you name it. And if we take a look at the yen futures, in order for them to turn the tide here, they really need to get above 0.88353. That's and we should anticipate that there may be resistance, because there has been thus far, at that point of control on the 10-minute chart. So watch 0.88395. You clear 0.88458, and then it's back off to the races to the upside. That would also say the 30-year Treasury would be back off to the races topside, as would Goldilocks. So that's a 10-minute chart. We don't want to spend too much time on it, but we do want to always make sure that the correlation is in place. Now, we're going to go from a 10-minute chart here step up to the big 30-minute time frame. And on the 30-minute time frame, what you really want to be watching is the seventh wave move. So from the top that came in, first of all, on a 30-minute basis at about 3 o'clock yesterday afternoon, really about 3:30, was when we had a confirmation of a TD sequential count on a 30-minute chart out here. Now, oftentimes that can be an identifier of a top. Well, we got that identification once price got below Stevie's red line. That's the difference between Stevie's analysis of the Tom DeMark indicator and the way that Tom DeMark uses it. Something to think about. Now, once price gets below that oscillator on change line, that tells us we have a falling price oscillator. Now, in this case here, above zero, I believe. Let me take a look on that 30-minute chart. Well, I don't have that tool out there. I could actually confirm that for you just by simply making one quick little switch out here. I might as well just do it. I might as well find out, are we above zero or below zero? And we were above zero. We are now below zero. Right here where we see this little convergence of these three lines out here, that tells me that the price oscillator, the difference between two exponential moving averages, in this case here, 19 and 39, I now know that we are below zero. Nothing more bearish than a price oscillator that is falling below zero. So that is where we are at right now. That makes it really important. But turn that back off, just go to one line out here. Makes it really important to be paying attention to the low that came in earlier this morning, about 9 o'clock. When it made a seventh wave move to the downside. Nice run that we've seen inside yen futures, the upside getting stronger out here. If, in fact, we see that get taken out, then the next leg to the downside, which is nothing more than a retracement out here, and would really form the A to B equals CD, a little Gartley buy pattern perhaps. So watch that low out here. To give you the exact number, if we come back to this chart, I'd have to give it to you off of this chart. Let me do this here. Let me just do this here. Where do I data window? Let me get that data window. So I'll give you the exact number to be watching inside yen futures, and that's going to be 0.88150. You close below that, and then what you should anticipate would be that the 30-year Treasury has more retracement to go. The same thing in gold. Percentage-wise, I can't tell you, but at this stage of the game, that is perhaps the best intraday take that I can provide you on the yen, on Goldilocks, and on the 30-year Treasury bond. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. So a great question came in, said, Steve-O, do you see any themes in equity sectors developing if the broad markets aren't giving a signal? Now, that assumes that the broad markets aren't giving us a signal. But let's take a look at all of that. Let's step back for a moment. Always important to do. And just get a feel for where we're at. So I just got to give you first the longer-term view in the picture of what to anticipate. That takes us to the cycle patterns that are working the best. Worked great in 2016. Thus far, working great in 2017. You might say, what do you mean, Willis? Well, what I mean here is if we take a look at the annual seasonal cycle over the last 85 years, and we go ahead and average out the Dow's turn dates out here, just so happens to be, if you're one who believes in coincidences, then strike this up to coincidence thus far. You see, the Dow is supposed to form a top, a high, not like the high, but the high on January 6th, and move down into January 30th. Then move higher into May, a little bit of retracement down into the end of June, and then back up into the middle of July, and then sayonara, makes another top into the October timeframe. You guys know this until you're blue in the face, but we do have new listeners that check in from time to time, and I just want to make sure that we get back on track out here. So now, how accurate so far has that January 6th date been for the Dow? Well, you already know the answer to that because we said, is that coincidence or not? The actual high for the Dow, intraday high, came on January 6th, 999.63 out there. In rounding terms, 20,000. So it makes that high. Since then, we have been trading. Now, with regard to the size of the move out there, this is what I have learned over many years, and take a look at the seasonal cycle out here, is you don't get too caught up into thinking that the percentage move is going to be equal, just simply that it is like the tide. right? If you're going to take a look at that, when it's coming in, when it's going out, and it's a cycle that you want to certainly be aware of. So today's the 18th. We could easily have another 12 days out here with before the market makes its next bottom, if it's going to stay right on time. I don't worry so much that it has to stay right on time. You just want to understand the time frame and then look for patterns and so forth out there. So that's what the Dow is saying. So longer term then, so what does that mean, Willis? Well, what that means to Steve-O, at least, is that if we take a look at where the next move higher is going to be, all we have to do is look at a couple different things. Number one, we have index consolidations. You know as well, and you need to talk about the last 15 trading sessions, very narrow ranging bar out here, sideways move up. So we're familiar with, we're used to consolidating markets, working with inside a range. The longer term view, as we take a look at these weekly charts out here, the Dow upper left, the S&P upper right, NDX 100 lower right, Russell 2000 NDX lower left, Russell 2000 lower right. This gives us our longer term, not long term, but longer term consolidation patterns. In this case here, for the Dow, taking you back into the 2013 time frame, where price clearly broke above it. November 7th, 2016. Clearly broke above it. And this says that longer term, we should anticipate not 20,000. Don't get caught up on 20,000. I'd rather you get caught up on 21,000, because that's what this pattern says. That is the price projection. That is the minimum. It's equal to or greater than when you break a consolidation pattern. So at this stage of the game, that's where things want to head. In the case of the S&P 500, its target is 2456. Now, we're not going to use these exact numbers. This is a guideline out there, but it's a really good guideline. And in the case of the NDX 100, we're looking at the 5545 area or above. Now, what's interesting here is that the Russell 2000 has already hit its price projection. And for many of you out there, know that I've been looking at that 1375, 1350-ish area for a long, long time. By the way, we're trading right now at 1352, but we've been above the 1375 area, equal to or greater in the consolidation. Is the Russell going to signal that that's it, tops up? No, it's equal to or greater than. If we take a look at just simple Elliott wave, basic, and I do mean basic, because if it comes to Elliott wave, I'm basically very basic out here, but the very basic, I won't use that word again, not in the next minute or so, the very normal move that's left for the Elliott wave to finish its fifth wave out here inside of the S&P 500, 2497. Coincidence? No, I don't think so. In the case of the Dow, it's 21,747. It's the big jetliner versus just 21,000 even, Stephen, out there. So that seems likely target. In the case of the NASDAQ composite, you're looking at 5,800. We didn't look at the NASDAQ composite. We looked at the NDX 100 in the earlier slide out here. And in the Russell 2000, Elliott wave aficionados will know that, hey, the consolidation number was hit, but the Elliott wave, doing the wave out there, it doesn't complete until you get to the 1470 area. So we know that the markets will typically, and I do mean typically, form a bottom in the end of January. And if we see that signal, it's time to back up the truck. That's the time to put your money to work. Look, that's the time to put your 401k money to work, regardless out there. Make sure your children know that. Those of you who do your tax returns and you lick your chops because you say, hey, I can deduct it from my 2016 return, but I don't have to put it in until April the 15th, if it is the 15th this year. Don't do that. You are basically messing with you're missing out on some substantial returns. Because the movement in the Dow, in the S&P between April 15th and the May 15th timeframe is much smaller than it is from the end of January until that April timeframe out there. So don't do that. That compounding is something you really want to be able to take advantage of. Okay, that is the longer term picture. Now, the question was, hey, what's going on in the sectors out here? In essence, assuming that the broad markets aren't giving us a signal. Well, not exactly the case out here. So let me change over to some of my other charting tools out here, and let's go take a look. So, for example, now we're going from longer-term views to, okay, the market's supposed to go down between now and January 30th. What signals are there? Well, let's look at the NASDAQ composite. What we know is that yesterday, you and I discovered, as we were data mining, that what the NASDAQ composite generated was a island top reversal candle. That is still in play. Today's move up was nothing more than a test of Stevie's red line, that oscillator on change line. That means that the price oscillator is beginning to fall. I can tell you it's still above zero. It just says that there's a retracement in place. I'm not going to go ahead and try to identify a target, but I will say that the NASDAQ composite has given us a topping signal. Hasn't completed the 1-to-1 A to B equals CD, as only in wave number 6 to the upside, but nonetheless, it doesn't matter. This is a topping signal, and today is nothing more than a test and a rejection of resistance. So that's in the NASDAQ composite, one down. If we look at the semiconductor index, the index that is doing the best today, it has generated a topping signal. Price was moving higher, doing less relative energy out here on this big candle. The date specifically looks like that was the December 28th out here. So nice reversal of that pattern. This typically not typically, my goodness, it does identify tops and bottoms. So there in prices below what? Stevie's red line tells us the price oscillator is still falling. So this has given us that topping signal. Let's go take a look at the Dow Jones Transports. What are they doing? They're also trading up a little bit today here. But this thing generated any kind of real topping signal out here? No. Not one of our typical patterns out here. Nonetheless, price oscillator is falling. Says it has more room to run to the outside. When we get back from this break, let's go take a look at the Wilshire 5000, the New York Stock Exchange, the NDX, and everything else. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 47 points. We're going through step by step, take a look at the different indices out here. Then we'll go switch over to the sectors to get an idea. Is the market communicating anything to you and I? Now, I may use terms like bullish, bearish, neutral. Just and don't get overly focused on those terms. There's nothing more than like green light, red light, yellow light out here. Okay, if I say bearish, I'm not talking like the 2007 top out there or something like that. That's in bullish. I'm not talking about the March 2009 bottom. It's just really a directional way for me to communicate where price is likely headed to. So let's go continue on here with the let's put up the XAU. Even though this kind of slides away from what we were looking at, but just so for those folks that are in the mining trades out here, if we take a look at Goldilocks, or well, not Goldilocks, we're taking a look at the XAU out here, nice bullish looking chart. There is no signal here. Do not, if you're an intraday trader, then but don't be thinking of shorting the mining sector out here. It's the price oscillator is rising. It is above zero. So you got that little convergence out here. Yeah, the price could easily pull back to $85 in the XAU, but it'd still be just fine. It is a bullish looking stock chart out there. That's the message right now. Now, the Wilshire 5000, get back to the indices. Does this provide us with any type of topping signal? And the answer, it does. So we're back to another indice right here. You can see this little blue 13. That's a time to mark sequential count. We can also see price was moving higher, doing less relative energy out here. With regard to the dates, that's right around the January 6th of all dates, and you get a nice little bearish reversal signal out here on the very next session. So that is telling us that there is a top that's in place, meaning that prices should continue to move lower, the depth of which I don't know just yet. New York Stock Exchange, has it given us a topping signal? The answer is yes, it has. It made that nice little seventh wave move off of the bottom here in November. Price was moving higher, doing it with less relative energy out here. The real price is below Stevie's red line. The real bearish message actually came in yesterday. Little bearish separating line out there. That's your bearish reversal signal. So this has suggested that it wants to move lower, likely through around the January 30th timeframe. The case of the NDX 100. The NDX 100 today, if it can close below yesterday's open, that will generate a bearish reversal signal, the bearish engulfing. But what we really would want to see, price needs to close below Stevie's red line. That is priced out right now at 50.3624 is the number. That would also be the completion of an A to B equals CD, a 1-to-1.272 A to B equals CD pattern out here. So the NDX 100 is sitting on the edge of potentially confirming a top. It has not yet. Again, you really want to see it close below my red line out there to give you a confirmation. But nonetheless, we would be aware and we'd say, aha, maybe there is. In the case of the Russell 2000 out here, formed a little price relative strength divergent pattern, trading sideways. Nonetheless, price oscillator still falling. We're below Stevie's red line. Top, yes. It's not like a top candidate. It's a top signal out here. If we go take, you kind of get the gist. What the heck's the gist? The gist of what the market. This is not Stevie communicating this to you. This is not like I'm coming up with some kind of put my finger up into the wind to see which way the wind is blowing. These are patterns that you and I trade. The Dow Jones was moving higher, doing less relative energy out here. We've gotten a couple different bearish reversal signals in it, trading well below the oscillator unchanged line, not doing too much with regard to its movement is sideways. That can be the extent of the movement as it just coils up. Price just kind of coils like a cobra and gets ready to attack. The S&P 500, price moving higher, doing less relative energy. Several days ago, 2, 4, 6 trading sessions ago, generates the bearish reversal signal. Top is signaled here in the S&P 500. So it is clear, but at least from my standpoint, it is clear that the indices have generated for you and I signals. We just went through them all. The only one that wasn't confirmed was the NDX 100. Or really a true topping signal was the transports, but it still is in certainly retracement mode with price trading below Stevie's red line out there. So the message could not be more uniform. So why not? And I've mentioned this to you. I was short because subscribers were short. We said after watching the sideways movement for a while and some other tools that I use, said, you know what? We're not getting the type of pullback we would anticipate. Let's just step out of the fray right now. Let's just focus on our mining and our bond trades out there. And let's just stay away from the indices as we speak right now. And then we'll keep coming back to it looking for more signals. Now, as we take a look at the Dow specifically out here, and first with regard to the New York Stock Exchange. If I look at the summation index, if I take a look at that, is that's the top, that's the second panel out here, but it's really nothing more than the summation of the advanced decline oscillator data. In order to be an oscillator, it means we've got to take a look at the difference between two exponential moving averages out here, still above zero. It's still above zero. The message is very clear that it really still is buyers that are in control. That's what leads us to the confirmation of gobs of liquidity. In the case of the VIX index, by the way, all that it's done today is test the 50-day exponential moving average, which is 1277. The actual high today has been 1281, and it's rejected that area. As long as it trades below that, the gobs of liquidity comment still holds true out here. The Dow, though, and the NASDAQ composite, NASDAQ's got the island top. The Dow here has been trading below its oscillator and change line, since December 28th out here. However, and you know that I make I focus, right? I focus on these areas, these price oscillator and change lines of what the price oscillator is doing, for good reason out here. I don't have any interest in just simply, you don't have time for it. I don't have time to give you BS type stuff out there, before Steve. It's just not going to happen. But the difference is, and here, the chart on the left happens to be Johnson & Johnson, by the way, which right now is kind of, for me, is the linchpin with regard to the potential signal. See, it is trading, if you look at the yellow line on the left-hand side, see it's reading as negative 0.01. It means like just below the zero line out here. And if it does close like this, below zero, then what we will have is we will have 1, 2, 3, 4, 5, 6, 7. 7 of the 30 issues inside of the Dow trading below its oscillator. It's price oscillator, below the zero line. Not below price oscillator. What the heck do you mean out there? Below the zero line. And someone would, which is totally different than just looking at the Dow itself, or the diamonds in this case here, or just like we did on the previous chart, right, where we took a look at, hey, the advanced decline oscillator has been below zero since December 28th. Not so fast. And the reason why it's not so fast, so if it closes like this today, then what we have out here, where did I put it? I think it's probably on a different workspace out here. Then we actually would generate another signal of a top. You want to get confirmation of it inside of the Dow. You see, that would then say with 7 issues that 76.67% of the issues have oscillators that have price oscillators above zero. However, when you hook that up with the 15-day simple moving average of that line, once you get these crossovers, bullish or bearish, they are muy importante. Today's close in Johnson & Johnson could be the linchpin. Steve Rhodes with TFNN. We'll be out there. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So even if Johnson & Johnson, does close with its price oscillator below zero, what I also know is when we take a look at its daily profiles, that's the left-hand panel of the chart that we're looking at here, it's still trading above its daily bottom of the box. So what else would I really need to see in order for that little tool and indicator to really float my skirt up? I would really need to see Johnson & Johnson fail. And that could be tough to do because look at this wide-ranging bar. I suspect there's volume behind that move out here. So let's take a look at it. Let me add volume out here. I don't know why it's not on there, but takes just a uno momento, por favor. And we will go ahead and add the volume out there. And, yeah, behind that move there was 9.5 million shares. And all the pullbacking, not even a word, but you know what I mean, has been on light volume out here. All the retracement has been on light volume. So, it says I really would want to see additional conviction, maybe a couple additional signals out here that is going to have the meaning that it needs to. One of those signals could certainly come from the New York Stock Exchange. So if you're saying, hey, what else does it take? That because the message could not be clearer with regard to what the indices are saying. They're saying topping patterns. Now, the great news is that there's nothing more. And so can I become overly bullish with regard to the indices? The answer is no. There's just no human possible. If we were at January 30th, could be a different story. It's January 18th. At January 18th, can I become overly bullish with regard to looking at the daily aspect of it? The answer is no, I cannot. You take out some of these highs out here, there is nothing more bullish than failed bearish patterns. That would be a whole different story out there. So then I could consider it, but we don't have that at this stage. So I would want to see the New York Stock Exchange. It only takes about 125 or 30 or 40 issues of net declining issues today to get its price oscillator below zero, joining the NASDAQ composite, joining the Dow. That would should get the sphincter muscle of any bulls out there. Then when I want to say bulls, remember with regard to your time frame, I'm not talking about intermediate term and long term. Stay the course. The markets are going to go tag those price levels that we took a look at until we get some other type of piece of information. But right now it would be make-believe information, and we're not interested in make-believe information and what if. Let's just go with what we know. out here. But from a daily perspective, a slightly different story out here. The other thing I will be paying attention to is in the futures market. This market is struggling. The NQ is struggling out here. It continues to, how'd that happen? Continues to try to take out its brand new TAS daily profile high. If it does that, then we could see some clear sailing for the next day or two. Hasn't done it. It's found resistance. The top is 50.52. The high today is 50.57. It's trading right now at 50.40. This box here is set up with regard to a bias to the downside. So we should fully anticipate that the NQ, what it wants to do is trade down to 49.96. Now it's got a clear 50.30 out here, but by goodness, that is the message of the strong equity futures contract out here. With regard to the others, the S&P is being a bit stubborn. But just really sideways-ish type move out here. So it's really going to be the NQ that needs to fail, but it has not been able to overtake a resistance zone. So that'd be another piece of information. The third piece you would have to say would be a close in the VIX index above its 50-day exponential moving average. So that would be about 1277. Then maybe things start moving to the downside in the equity markets, and then you would anticipate that would come to an end as the VIX index gets up to about the 1507-ish type area out here. That may be the top or the lid on the high of the VIX index. So hopefully, we didn't take a look at the sectors out here. So let me do that real quickly. Let me switch over and take a look at the XLK as an example. The number one sector inside the S&P 500. Has it given us a topping signal? It's now generated two. First, a couple trading days ago, a seventh wave moved to the upside. So we got, let's see, there's wave number 7 or wave number 2. But then yesterday, a nice little Tom to mark, 9 count. That's referred to this setup out here. And today, right now, price is trading below that oscillator and change line. So the XLK, the number one sector in the S&P 500, yes, has given us a topping signal out here in XLV. So would you want to be long that? It's hard to make that case. It's hard to make that case right now. XLV, topping signal, no. Pulling back to probably the 69-ish area, the bottom of its TAS daily box. That's probably what is in store for it. I don't have volume on those charts out here. It is important to take a look at volume. And if we look at the XLF financial sector out here, this says that it wants to pull back more, probably to this little line out here, which is back at the lows around the what is it, price point, about 22.20 or so, right where we saw a nice move higher, where the top of that move higher is at. So coming back to that area would make a lot of sense. And I was going to say, hey, based on volume, the old volume schmolium thing out here, take a look at the QQQ series ETF. Today, so far, we're looking at 7.9 million shares out here. Now, let me find out. Let me just do the quick math on that. I think it's probably still like 13, but 7.9 we've been trading for nearly 4.5 hours, really close to 4.5 hours, right? Not exactly, but close enough for cigars. Wow. If that's the case, now right? You do know this, right? You're going to say, hey, Stevie has taught us this, right? With regard to volume in the Qs, what have I taught you, right? What have we learned together out here with regard to volume inside the Qs? It makes bottoms with what? Big volume, and it makes tops with no volume. And yesterday, inside of the QQQ series ETF, 14.5 million shares. As we're looking at it today, we're at 8 million right now. It's like a 13. Now, yesterday was a holiday, right? So you had Martin Luther King. So I looked at the volume and I said, I don't know. Still qualifies as holiday type trading. But today is saying, are you kidding me? Holiday trading out here, it's likely going to do about 13 million shares. It's just another piece that does say to me that the indices, the sectors, they're all signaling to us that a top is forming. But we've only gotten, it's not even 12 trading sessions or so of movement to the downside. So, hey, look, that is where I believe that we are at. So in summary, long term, these markets have got a lot further to run. In the short term, between now and the 30th, there should be more of a retracement. The depth of which I am uncertain of. What I do know is you want to be a buyer of that next bottom. I'd say look inside that financial sector out there, because that has got a ton of room to run to the upside out there. Perhaps is the sector that really leads the charge for 2017. That Goldilocks and so forth. So that is Stevie's take on what the charts are communicating to you and I. Question from Danny in Atlanta. Would I go take a look at Lightspeed Crude? Probably wanting me to get off of this little soapbox here, and most certainly we will. But hopefully that little soapbox, assists each of you with regard to what the markets are communicating to you and I. So as we take a look at the Lightspeed Crude, let's go see what it's doing with regard to TAS profiles. It's trading just slightly below both the bottom of the daily, 52.25, and below the top of the weekly at 52.32. So, Danny, this is suggesting to me, it just depends on the close. Watch the 52.24. You close below that, no reason for Lightspeed Crude not to head to 50.78 next. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So let me properly answer the question, which was, do I see any themes in equity sectors developing if the broad markets aren't giving a signal? So we've already covered the broad markets with regard to the handful of topping patterns that we use to identify tops and bottoms. So we already know that. We're not going to belabor that. But the question was, do I see any themes in equity sectors developing? And the answer is yes. So even in light of that, if we take a look at the consumer staples sector out here, the XLP, that's the one that shows me the largest bottoming style pattern. Now, price was moving lower, doing less relative energy out here. And we can see that on this trading session right here, right around December the 2nd, was when you saw a nice little bullish reversal signal, the bull sash that formed out there. Now what it looks like the XLP is doing, if you're wondering where the rotation is going as we speak right now, it's going into the consumer staples area. Now, I say that because it looks like what we have is maybe an A to B equals CD. So we know we had a very valid bottoming pattern that formed out here. That's back on December 1st. Price moves higher into the trading session of December the 14th. Nice little bearish reversal signal. So that's going to be your resistance. That's going to be the high, 52.69. Pulls back here into a couple of trading sessions ago, January 11th, volume of 12 million shares as it was moving higher with 14, 17, so it's moving higher with volume. Yesterday, big move into the consumer staples, 19 million shares. 19 million shares pushing into the swing point that's got 25, but volume was accelerating coming into it. So it is a positive. If we, in fact, see price overtake 52.69, ideally do it with volume, more than 25 million shares. We're certainly not going to see that today. Then you're looking at a confirmed A to B equals CD to the upside. That would set up potentially the next Gartley sell. But that would take the XLP consumer staples into the 54.06, 54.80, 55.73. And then that would say, hey, you'd likely want to go into the, I'd say you'd go into your TAS system out there and look for equities inside the XLP that are at the bottom of the daily box and above the top of the weekly. That would be your scan, and go take a look at those individual stocks and see if the reward to risk is there, because this still is a stock picker's market. And so the consumer staples XLP is the one sector that at this stage of the game looks like it's actually forming a bottom in light of everything that we took a look at for the indices. The question that comes in here, thank you, AG. I need some help in. I guess I got the last minute out here, so that's good. So just fill in the time. So BP, the question is, where is the level to get into? And as we take a look at it, let me see here if I can change real quickly. I'm going to see where my red line is at inside of BP right now. It's trading out about 37.20. The answer to your question is going to be 36.50. That's the first thing that pops up when I take a look at it, and that is the bottom of its TAS weekly profile. So that would be the first place that I would be looking. Yeah, and the reason that I would be looking there in BP is because you got a TD sequential count right out here. I'm not going to go ahead and pull it up on my screen, not because I don't want to, but it was right here on January the 13th. Oh, the pound. The pound. You want to know where the pound is at? Well, that's a different story. Good thing I saw it. I've got it for just a few seconds. An entry point for the pound. Let's see if I can get there real quick. Come on. Oh, that didn't work. That didn't help. That didn't help at all. AG6B out here is what I want to take a look at. Let me see. The answer is going to be a 1.2248. Where I'm going with that is Stevie's red line. So a pull back to that level, bouncing off of that, that would be your buy point. Closing below that, not so good. Folks, have a wonderful Wednesday. Stay tuned. David White will be up next, and we'll see you back on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.